Hi, and welcome to my channel. For those of you new, my name is Dave and I work in financial services, and these videos are mixed towards financial freedom, financial well-being, financial products, so you, like me, can reach your goals sometime in the future. Now let's get into this latest video. Now this latest video is all about why is the price of gold rising? It's a common question asked to most people, shall we say, as we're bombarded in the UK with radio adverts, news adverts, social media about the price of gold going so-called galactic. But why is this asset class having a meteoric rise in recent times? Are we in some kind of bubble? Are we in some kind of short-term market fad or trend? Now, why do people buy gold? Well, gold is considered to be seen as safe assets in so-called troubled times. It's often called to what we call an emotive metal. It divides opinion across investors and the public. Gold has been around for centuries as an old trading currency and will continue to be around for many years in the future. However, though, the uses for its existence and general use have changed in recent years as people generally use cash in the forms of currency to trade and buy things. So why has the price in gold increased dramatically in very short recent times? Well, the central banks have what we've been stockpiling it and storing it. They've reduced their exposure to certain assets, such as the US dollar, which has always been seen as the ultimate safest form of investment, as it was fully protected by the US government and was seen as the original gold standard for reassurance against loss. But in recent times, we've had such heightened, shall we say, geopolitical risk and conflict across numerous countries, such as Russia, Ukraine, the Middle East, and a worsening relationship between investments between superpowers, mainly USA and China. A simple example, China has greatly been reducing its holding of US dollars in recent years and has been investing elsewhere, such as gold. A similar action also done by numerous countries, let's just say Poland, Turkey, India, name a few. They've become what we call net buyers, adding to their reserves. It is believed collectively they bought about 1,000 tonnes each year since 2022, whereas in previous years they were averagely buying around about 481 tonnes as an average. This has also resulted in the US dollar using value in real terms, and all this has done is reduce the price further. So what happens? Well, people then invest in more safer assets, shall we say, in a hedge against safer times or so-called currency fluctuation. So it's a vicious circle. A simple graphic about what's happened to the price, shall we say, in very recent times. Well, it's shot up dramatically. Now, in 2024, the price went up, shall we say, from around about £1,637 an ounce to just over £2,000 an ounce, so an increase of 20%. For 2025 year to date, up to the middle of May, the price has now gone up around about £2,400, so an increase in 2025 of 16%. But can it be sustainable? Now, look at the following graphic. Nothing's really changed in regards to supply and demand, shall we say, whether it's for technology, jewellery, investments, but the price has gone up if we look at, shall we say, the gold bar in the graphic. People jumping on the bandwagon, is it some kind of fear of missing out? Is it some kind of short-term bubble? Now, many years ago, the idea of buying gold for the public, it wasn't really an option. It was always seen as being some of the leastest to the rich and wealthy. Now times have changed, and it's very simple to buy gold, whether it's online in a matter of minutes, through some kind of broker, shall we say some kind of ETF. You can hold it yourself. Social media has also had a great information on the price of gold because of the abundant information, and it shall be seen as a get-rich-quick scheme. Okay, but will that bubble last? Will it burst? Will it upset many investors? Okay, but it is just going to show you can buy gold very simply in a matter of minutes online. What are the pros and cons for holding gold in the first place? Well, the pros. Gold has a long history and a successful track record. It can be seen as sustainable and both a beneficial asset. Number two, it's considered very liquid. It can be easily traded or exchanged. Number three, it has a limited supply. Only around 216,000 tonnes have ever been mined or extracted from the ground since it was found. Number four, the annual rate of extraction, so getting out of the ground, is only growing by a minimum amount around about 1% each year. Number five, it has a very good long-term investment return and a good track record. Number six, most important for most people, It is seen as a hedge against preserving capital during uncertain times. And number 7, within the UK, shall we say, certain types of bullion is classed as capital gains tax free within the UK. So there's some pros of why people hold, shall we say, investments. But what about the cons? Number 1, it can be seen as very volatile within a short term period. Number 2, it doesn't review the yield, interest or dividend on its original investment. Number 3, the price can be somewhat dependent upon what a buyer is willing to pay you. Number 4, it can be expensive to store a home if you use a vault, storage for someone to hold on behalf. Okay, can you afford them costs? Number 5, are you happy holding such a valuable asset on your own premises? What about the cost of insurance? What about the cost of storage if you do happen to have a sizable amount? Okay. And number 6, it may well be considered, shall we say, hugely limited. It may well be for technology. It may be jewellery. Okay. So yeah, hold gold, but do you hold it physically? Do you hold it on a vault? Does someone hold it on your behalf? How does someone physically hold or buy gold assets? Well, you can use a simple and cheaper option of buying what we call an ETF tracker through a broker, let's just say held within an ISA account. Now, the numerous have popped up recently, shall we say, due to popularity. You will pay a small fee to trade or purchase respective items, and sometimes a management fee on top of that. But most platform providers online will have a list of funds available that cover the specific sector. Or you may hold shares, shall we say, in companies listed in mining companies, let's just say in the FTSE 100. So simple examples may well be Fresnillo, it may be Rio Tinto, it may be Antofagasta, it may be Glencore. So you may want to hold shares, shall we say, in physical companies that are responsible for extracting the mine. Okay, and how have they performed lately? Well, very good, because, shall we say, profit margin increased. The gold price has gone up, but the extraction cost may well be the same. But do you want, how we say, that direct exposure between certain companies in good times and bad times? Or it may well be purchase gold yourself and hold directly or through, shall we say, an online broker. Now, a company I'm going to recommend, shall we say, I'm not here to sell or promote them, but I do use them, I will make some in it, is someone called bullionpost.u.uk. They have very little fees. They can buy gold, silver, shall we say, across sectors. You can hold it yourself, normally delivered the next day, or you can hold it, shall we say, VAT-free in the storage. Now, some disclaimer. Other companies are available in the UK, but this is the personal company I use. Now, I don't buy gold through them. Okay, I'm not here to promote gold, but I do buy 1 ounce of silver at each coin each payday. It's done online in a matter of seconds, and the coin is delivered to me free of charge, normally the next day. Now, they have great tools, charts and advice on the website about how you get started in gold. It may be other precious metals as well, but you can store them VAT-free on your behalf through a vault such as Brinks. You can use them yourself. The reason I buy silver is it's a low cost. I invest each month around about £35 to buy 1 gold coin, because I see it more, shall we say, price to ratio to gold is somewhat cheaper. It's not in a bubble. But I'm going to hold that for definitely for many years, and it may be passing in family. But my total holdings makes up about 1% of my total net assets, but it's done for a reason. So I don't buy physical gold myself, but I'm just going to make a disclaimer. I do own, shall we say, silvers in the form of precious metal. What about, shall we say, speculation? Are we in a bubble? Are people fearing missing out because it's, shall we say, on the news? Okay, no investment class can be seen, shall we say, completely risk-free or completely, shall we say, going to produce good returns year on year. But we will have good years, we'll have bad years. But the idea is not to trade the market, but to think long term, like any investment. Ask yourself a simple question. Why are you buying in gold in the first instance? And where does it form part of your investment risk, your strategy, your objectives? Your aim is to improve your financial knowledge and financial position in the long terms. Create what we call legacy wealth. Now, short term, some analysts and forecasts reckon the price will fall significantly in the coming months. The consensus is the market may go down to about $2,000 over the next few years per ounce. They are only prediction estimates, but it just goes to show that a downward trend is predicted across analysts. What about the idea of holding, shall we say, could you react, or how do you react if your gold price sees a substantial decrease in the short term? How do you handle assets and what do you do? Could you afford to sell at a loss? Do you need to sell at a loss? Where does it fit you? Where does it fit in with your investment aims or attitude, your risk inspection? It may well be investing a full amount of the portfolio, but shall we say a minimal amount? It may be, let's say, 5-10% of your portfolio. Now remember, it's my own personal opinions. If you like this blog and video post, shall we say, or YouTube channel, check out my blog, moneyminted.co.uk, about other investment products, pensions, so you, like me, can improve your goals, investment wealth sometime in the future.